What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons. That way you're alerted to when we release new videos. We do release bonus content from time to time, so you want to make sure you're alerted when we release those videos. But the nightly and weekend videos, like today's video, we focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings or leap trades. So if you want a deeper dive into exactly how we set the charts up, broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you are not familiar with the STRAT, which is the base of our charting and trading method, here's a quick reference PDF with a link to this in the description of this video. So make sure you download that and get the information that you need. The STRAT is a very easy and simple way of understanding price action, and so that's the reason why it's just the base of our trading method. Now we've layered on our levels of nuance on top of that, but just to get a base understanding of where we're coming from, make sure you check out this document. But anyways, I encourage you to watch the full video, because along with the triggers and targets for Monday and the week, we give some pretty good insight into the price action on all time frames. So let's go ahead and take a look at the agenda for today. We'll go ahead and recap the price action from Friday, February 20th, before we zoom out and look at the week, month, quarter, and year price action. Then we will take a look at the market maker's expected move for the week of February 27th, before we zoom back in and set the 4-hour markers and the triggers and targets for Monday, February 23rd, the week of February 27th. And then we'll also get in there and do a quick review of the triggers and targets for the week, month, quarter, and year as well. So let's go ahead and go to the charts and start here like we always do on the 5-minute. This is how we can identify the proven and repeatable strategy that we use to make money every day, right? So that strategy is to take the opening print, or the first traded price of the day, and watch price action from there. If you get higher, if you get higher lows at or above opening print, then you want to get into calls. If you get lower highs at or below opening print, you want to look to get into puts. Now, when you get into those calls, the targets for those calls should be overnight high and previous high a day. Now, if we reach, that second target, whether it be overnight high or previous high a day, whichever one comes second, that is the ultimate target for the move off of the opening print. But depending on price action, momentum, things of that nature, then we can always turn to our 4-hour and 1-day triggers and targets to continue that move that we've been able to get into early, right? The idea is to get scalps early in the morning, or early entries into longer day trades, right? So that is the strategy. Again, it's very simple, and as long as you stick to that strategy, you should be pretty successful, right? It's not to say that the strategy never has any losses, but it allows you to set up great positions as far as risk to reward, to allow you to benefit from larger wins and smaller losses, right? It allows you to get those losses out of the way quick if things do turn, the opposite way of what price looks like it was going to do. So again, a very highly successful strategy as long as you stick to the script, essentially, right? So looking here at the 5-minute, you can see we had a big candle in the first 5-minute, right? Opened up, went down, bounced off an overnight low very quickly, and shot up, right? So unless you were on the 1-minute, you weren't able to get a higher low here, but we did shoot up, got a higher low here. So you could have entered right here at the as soon as this candle went above the high of this 2 down, locking this 2 down in as a higher low. However, we had a big shoot up, shot up real quick, but you can see it's a wick, right? So it shot up, but it got sold back off, right? And you can see we're dealing here with this 138.2 fib of the of last year's price action. You got this daily downtrend line coming in, this orange dashed line. excuse me, you got the 78.6 of the pullback from the high, like a couple of weeks ago, basically the high of 2026 so far. You were approaching the market maker's expected move high as well. So, there was some pressure here, and the bears won, right? So they got bought back down. Not only did it get bought back down, it went down and made a lower low, lower high, lower low. So your entry would have been here. Your risk to reward, you could have risked price going down to the low of this too, as your exit. So if you stuck to the rules, technically that would have been a loss right there, right? You would have stopped out right here. And if not there, then we had this lower high here, and you should have stopped out here. So either way, it was a small loss. But as we continue to watch, things do get turned around, and you get your higher low here. And if you also, you should be looking at multiple time frames, right? If you're familiar with this channel, then you know that. But if we look here, we're getting a higher low on the 15-minute as well. So, excuse me. Not only is it a higher low on the 15-minute, it's a 3-2 failed 2 down. So say none of these candles were on the chart after, we're in the middle of this candle. You can see that we're going 2 down, but it's failed, meaning we're above where it opened. So the candle's not red, it's green. And we're pushing back above that overnight high level. It bounced off of last week's 50% line, which we know is a very important level. So especially intraday. So this was definitely setting up to move higher, right? So you could have had another entry here. Once we went 2 up, starting this 3-2 down, 2 up. But again, look at where we were running into, right? There's this daily downtrend line, the 138.2 fib extension, market makers expected move high, big wick on this candle here. So even if you do complete the strat, you got to watch out for a possible like double topping situation on the 5-15 minute. And so, technically you could have taken this as soon as we went higher here. You could have taken this. Now, you would have probably wanted to take profit on some of your position, and when the strat was completed, knowing the resistance that you're running into. And then once we get this essentially double top here and go 2 down, right at the levels of resistance, probably would have wanted to go ahead and sell the rest of the position here and just live to fight another day. And the reason is apparent here, because we go down and we get a lower high here, so you could have had another opportunity for puts at this point. So you could have entered at the low. Once this candle broke below the low of the 2 up here, locking this in as a lower high. You got the push down, bounced off of last week's 50% level, came back up, made a lower high, but then ended up making a higher low, right? So probably want to stop out here, knowing that at the very least, or not stop out necessarily your whole position, but some of your position here, and take profit, knowing that there is the opportunity to go ahead and push higher. So once this candle did go 2 up, locking this in as a higher low, right? You want to sell part of this position here, and then as soon as it goes higher high, then you want to probably sell the rest of the position here. So you should have got out of the whole position in this candle. Even though we are, again, running up against this level of resistance, we want to see confirmation that it is going to go back down, because we did get this higher low here. So at the very least, we've stopped out for sideways consolidation, which is fine. You don't want to just necessarily sit through a bunch of chop. Whoa. There we go. And then best case scenario, you're just waiting for another lower high to get in on more downside based off of the levels of resistance. But that just didn't happen yesterday. You got the higher high, you got the higher low, and then it was working on a lower high here. But you can see you got 2 3s back to back, green 3s at that. So not very bearish in our opinion, right? That's more of a bullish indicator. Now, we didn't make the higher high simply because we ran out of time, right? The day ended at that point, but there's a pretty good chance that we were going to go make a higher high in relation to this high here, not necessarily a new high a day or anything like that, but there was the potential for that to happen. But all in all, a positive day. If you had swings, right, you could just sat in these and got a little bit of basically, what am I trying to say? Unrealized profit. Watch the value of your contracts go up. You could have sold some yesterday. It was options expiration yesterday as well. I say yesterday, I mean Friday. So just depending on your position, it could have been a very good day. It could have been a day where you didn't really do much. There was an opportunity for two-sided trade here, especially if you were a scalper. So definitely a lot of opportunity on Friday to make some things happen. But overall, really kind of sideways, right? Slowly crept up a little bit. If we look at, let's go ahead and zoom out a little bit more. If we look at the 1 hour, let's get a cleaner chart. If we look at this 1 hour, right, there's, again, clearly no real trend, right? We're just going sideways. Yes, you've got your intraday chop. So if you are good at scalping and short-term trading, this is obviously very beneficial for you. But if you're a swing trader, you're just looking at things going sideways, barely creeping up, like, come on. So, those February positions aren't moving a whole lot right now. Intraday they are because of the intraday movement, but at the end of the day, they're not moving a whole lot. But it's okay. We're still continuing, at the very least, this is, kind of like bullish consolidation, and the fact that, we're consolidating above the previous range that we were trading in. It's not like we're falling down, continually testing the bottom of the range, looking below and failing or something like that. It's just, we're just moving sideways, right? So not a whole lot there. If we look at the 4 hour, basically same type of situation, right? Let's make this bigger for those on phone. There we go. Right, so popped up into this new range at the beginning of this year. A little bit of a look below and fail here, but again, just moving sideways in between, 58, 59, and 70, 71, right? So top of the range would be here. Here's a little bit of a look above and fail. Here would be a little bit of a look above and fail. So again, we're pressing towards the top of the range again. And especially if you're a swing trader, you want to wait till we get to those edges, right? Once we get to the top of the range, you want to look for either that look above and fail to look for price to go back to the bottom of the range, look to buy puts, sell calls up here. Or if we poke above and get some type of higher low and bounce, right, then we've got confirmation that we're going to test the next trading range, right? Once you break out of one range, the object is to double it, right? So there would be another range up there. You can see the market maker's expected move high for this coming week is up here at 76.19. So that would lend itself towards making that higher high on the week time frame, locking in that lower high a couple of weeks ago. We'll get to that here in a second, but just you can see from a 4 hour and 1 hour standpoint, there's not a whole lot of trend going on here. Just a bunch of range trading. So make sure you're preparing for that as we continue to move forward. And even looking at the day, right, it's the same type of thing. Right, we popped up out of this range at the beginning of the year, got a little bit of a support indicator here by the higher low and bouncing up. So now we're up in this higher range like we were talking about, and just sideways action, right? Nothing really to see here. We had the higher low here, but followed by a lower high, followed by a higher high. And this could be a lower high depending on what happens on Monday. So this is the definition of consolidation right here. We've just got to be patient if you're a swing trader, right? Right now, the scalpers and the intraday traders are definitely making their money. Swing traders are still making their money, but you've got to have time on your contracts. These 1 week, 2 week expirations, those don't really move like you would want them to. Necessarily how should I say it? I'll just say that longer dated contracts they just give you a little bit more wiggle room, especially on these days where we're just moving sideways, right? You remember Thursday, technically it was a 2 down on the day, but it was such compressed action in comparison to the days before that. We're just consolidating right now. So even on the day chart, it's tempting to reverse trend because technically we had the lower. No, I'm sorry, we weren't even in trend. We're trying to get this trend moving up instead of just sideways, right? It felt more like a downtrend, I'll say like that, right? Because we did have this big down day, and then even though we had a couple of green days, we made lower lows and lower highs, right? So It definitely felt more like a downtrend on the 4 hour and 1 hour for sure, but on the day it was kind of showing itself as well. So again, patience is just the key here. I'm kind of rambling at this point. There's not really too much else to say other than being patient, especially if you're a swing trader, right? Let's zoom out a little bit more and take a look at the week. Let's clean up the chart here. Let's just get a fully clean one. There we go. And we can see this is what I was talking about earlier. A couple of weeks ago, we had this lower high locked in by that 2 up that we got last week, or in this case, 2 weeks ago at this point. But this past week was an inside week. So you want to see that continuation to the upside. 2 up continuation, get above this, was it 71.98. Once if we get above 71.98, bulls can breathe a kind of a sigh of relief that we've made it past this possible lower high on the week chart, right? So if we got very close to going 2 down on the week last week. If we did, that would have locked the previous weekend as a lower high, and now we would have been looking at, okay, are we going to just move sideways, or do we make that lower low on the week, right? With the gaps here at 55, 48, and 44, was that going to be enough of a magnet to pull price down and lock this in as a 2 down? Now, we're still not out of the woods, right? We haven't gone 2 up and made the higher high yet. We're still inside, but it was a very bullish inside week, right? From the standpoint, we got a solid green candle. We closed in the upper half of the previous week's range, not quite the upper third, but the lower part of the upper half of the previous week's price action. So we do still want to keep an eye out for a 2 down in this coming week, because it gives us the possibility of lower high 2-1 2 down reversal, which would bring us down here to 49, possibly making a lower low. But it's again, it would just add more patience to the equation, right? Because unless we made a very fast move to make that lower low, it could take a little while. We could push down, make a higher low, make a lower high here before going down. But we're not out of the woods yet on the week, but it's not the most bearish thing in the world, right? It's just sideways action at this point. We're looking for that 2 up and higher high on the week, but there is that opportunity for the 2 down and making a lower low after a lower high. There is also the opportunity, because this is a 1, if we do get the 2 down next week, that we could get a failed 2 down, or even just a regular 2 down. But then the following week, get a 2 up for a 1, 2 down, 2 up reversal that would take us back up to the high of this 2 here. So that would just signal more consolidation, bullish consolidation. So patience is the name of the game, and nothing is broken down on the week and above, right? Let's take a look at the month. There is the opportunity here as well to go 1, 2 up, 2 down, right? We're still an inside candle this month, with the possibility that we could go 2 down. Now we are in the upper third of the previous month's price action. Nice green solid candle with a good wick on the bottom, showing that bears did have their chance, but it was bought up very quickly. So I don't think that this 1, 2 up, 2 down is going to trigger. But again, we're not into predictions on this channel. We give price, triggers and targets on both sides of the equation. So although we don't think this will happen, we will still be prepared, right? If we go 1, 2 up, if this month goes 2 down, magnitude of that move is the low of the candle to the left of the 1. There's also a gap right here. So there is the possibility of having a very deep pullback. If we fill this gap, does this gap start to attract us? If we fill that gap, does this gap start to attract us, right? Do we come all the way back down to these April lows from last year, where all these gaps were left behind on that huge run up? There is that possibility. Not saying that that's going to happen. Again, we don't get in predictions, but we want to be aware of what is on the table, right? So right now, it's looking very positive. Bullish consolidation at worst, but looking to continue the trend upwards, right? This was a higher low here in November of 25, and we've made the higher high, so we are in an uptrend, and we just want to continue that. So nothing breaking down on the month, just be aware of what could happen. On the quarter, we've talked about this ad nauseum on this channel, because it was out there for so long, for so many quarters. But we did trigger this 1 combo 2 down, combo 2 up, and we ran the STRAT, right? It reached magnitude up here at 70.08. So you can see the little bit of pullback and sideways action up here at the top, but The quarter is bullish at this point, or it's been bullish, right? We triggered that 1, 2 down, 2 up. It's reached STRAT, and so on the quarter, we're just waiting for something else to set up on those lower time frames to trigger something else on the higher, right? And the same thing goes for the year, right? We had this 2 down in 2025, very quickly went 2 up in 2026, triggering this 2 down, 2 up. Magnitude of that move again was the 70.08. And we've reached that and had a little bit of a pullback since then, but still just moving sideways, bullish consolidation. So quarter and year, ran the strats, nothing else to really get from those. But there's nothing, bearish about them either, right? We're just looking at bullish consolidation on the very high time frames. The week and month, we're in that uptrend, trying to continue the uptrend. Possibility for things to turn around, but and go back to the downside, but not close to triggering at this point. And we'll talk about those more as we approach those turning points, if we approach those. But right now, just things are just looking bullish, and it's just on the day and below that we're getting that volatility. So those day traders, scalpers, intraday traders, making some good money, and swing traders just needing to be patient, right? Making sure that they've got plenty of life to go on those contracts, right? Let's go ahead and take a look at the market makers expected move for this coming week. Let's go ahead and bring up, there we go. Looking at the 4-hour time chart. There we go. And actually, we should look at it in the context of the week. Week chart, there we go. So we can see, here's our price action over the previous weeks. All right, there's that higher low. And then here's this past week, right? So the market makers expected move, right? We had an inside week, so it's perfectly reasonable to think that the market makers expected move would be above and below the previous week's high. How much is a question, right? So market makers expected move low is down here at 58.03. So it is below last week, which would give us a 2 down, but look, there's not a lot of magnitude to that in comparison to the market makers expected move high up here at 76.19. That would definitely give us the 2 up. The 2 up higher high on the week, locking in, not only locking this in as a higher low, but continuing the trend because we made a higher high. And that would continue to bring us up here to that 76.19 level, right? Now, the way that we get the market makers expected move is off of the options chain, right? So there's a couple of ways you can do it. The very easy way is going to think or swim, and you go to the options chain for this coming week, February 27th, and we go over here to the right. There's a number in parentheses, plus or minus 9.075. That is the market makers expected move for this week, right? Plus or minus $9.08 essentially. So that's the very easy way to get it. There's another very easy way to get it, but if you take the at the money straddle plus the in the money strangle, and then divide that by 2, that is a precise way of getting the expected move as well. There's also a very easy way of getting a general idea. You can take the at the money straddle and just basically use that number. So 425 and 370 is 775. I'm sorry. Oh my goodness, I did that again. Not the bid, the ask. 425 and 410. So that's 835. So it is less than the ultimate market maker's expected move. But it gives you a general idea. If you want a more precise one, then you do 425 plus 410 plus 475 plus 380 divided by 2, and that'll give you that 9.075. So that is our market maker's expected move, and as you can see, that would give us that higher high on the week time frame to continue that uptrend, right? Break us out of that sideways bullish consolidation, right? Let's go ahead now and move to the 5-minute and look at how we want to attack Monday morning, at least, from like a scalping perspective, using the proven and repeatable strategy. Let's try and get our 4-hour markers in here. There we go. 66.85. So overnight high and overnight low. say 66.85. So it's not too far down. We'll just say it gets down a little bit lower. And we'll say overnight high moves up a little bit, right? So on the chart, we have our 4-hour markers and a couple of honorable mention levels, right? So we've got previous high a day. So the 4-hour markers, previous high a day, overnight high, overnight low, previous low a day. Those are your 4-hour markers. Now the last of those 4-hour markers is the opening print, but we can't get that obviously until the market opens. So just before the market starts, make sure you have these levels out here. Now the honorable mention levels are the 64 flat, that's last week's 50% level, and 68.44 is last week's high, right? We talk about the previous week's 50% level every week, right? The way that we react to that level is usually a good indicator as to how the rest of the week will go. If we come down here and we just blow straight through it and continue moving down, then we're probably going to be having price action below this level for the rest of the week, right? It may pop back up and peak above before failing back below, but more often than not, that's how price would generally go. Now, if we come down here and hit this 50% level, maybe bounce, come back down, bounce off of here. If we're just playing with that 50% level, we may have kind of a flat week like we had last week. But if we come down here and we bounce and we have a nice bounce, right? We go and push back towards previous high a day, last week's high, then there's a pretty good chance that the rest of the week is going to be above the 50% level of the previous week, and possibly even just above last week's price action altogether, right? So just keep that in mind. But as far as the proven and repeatable strategy for early morning scalps or for early entries into these longer day trades, we want to use those 4-hour markers. Let's say price opens here towards the lows, overnight lows, right? If we get price action that pushes up, maybe we get a rejection off an overnight high and we come back down, but we make some type of higher low at or above that opening print level. We want to look to get into calls. First target being overnight high, second target being previous high a day. Now, depending on where that higher low is and where the entry is for that higher low, there may not be a lot of room, a lot of magnitude for that overnight high. So, I wouldn't blame you for keeping the whole position, looking for that previous high a day. Now, if we do get above that overnight high before we get to that previous high a day, more than likely setting stops for a majority, half to a majority of the position here at overnight high in case we can't get that price action to get all the way up to previous high a day. We want to protect against, that pullback. But previous high a day would be the ultimate goal for that particular move. Right now, we have our triggers and targets for the 4-hour time frame, the 1-day time frame, 1 week, and so on. But for this proven and repeatable strategy based off of the 4-hour markers, previous high a day, overnight high, opening print, overnight low, and previous low a day, that is the strategy, right? Higher lows at or above opening print, look for calls. Lower highs at or below opening print, look for puts. Obviously, overnight low in this case would not be a target in this situation. It would be previous low a day, but you should also use last week's 50% level as a possible bounce point as well. So I would probably use that as a target, just before you get to that previous low a day. Right, so higher lows at or above opening print, look for calls. Lower highs at or below opening print, look for puts. Right. Let's zoom out here to the 4-hour time chart so we can look at things a little bit differently, more from a full day trade to possible overnight swing trade perspective. Again, we're in this range that we've been in between 69.70 and 59.58. We're still in the middle again. We're moving back towards the top, but we're still in the middle. So swing traders want to wait for those edges, right? 69.70, wait for the reaction there, right? Do we get the look above and fail, or just a straight rejection of that level and start moving back down? At that point, you want to look for, puts and selling calls to get back to the bottom of the range here. But if we do happen to poke above and make some type of higher low, then you want to look for calls moving back towards the upside, right? Scalpers, intraday traders, this should be your fun time right now. This is a lot of opportunity here. Swing traders would look at this as just a bunch of chop, but scalpers and short-term traders, that should be opportunity for you. So yeah, that's just how we'll approach that. Anyways, from the 4-hour time frame, looking at the strat perspective, we would have a 2-1 2 down reversal if we go to the downside, triggering at the low of this 1, magnitude being the low of this 2. Now if we do go below previous low a day, Friday's low, technically that does trigger a 1 2 up combo 2 down, magnitude not being that far though, just the low of the candle to the left of the 1, which happens to be right here around the $62-63 level, or $62.80-$63 level. So downside, not a lot of magnitude there. I mean, yeah, not necessarily a lot of magnitude there, and kind of a range with this smaller range within the bigger range that we've been trading in. So once you do get to that point, you will want to kind of look for a little bit of support, probably exit your positions, maybe leave a runner or two, and just see if we get that continuation to the downside, or do we hold the low of this mini range within the range and try and push back up. Right now to the upside, 2-1 2 up continuation triggers, not a lot of magnitude there. Triggers at the high of this 1, magnitude being the high of the 2. So definitely less there from that perspective, just the straight up strat, but we would be moving back towards the top of the range at that point and continuing an uptrend from the daily 4-hour perspective. Right, this is a higher low. If we continue to push up, that gives us a higher high, starting an uptrend. So want to see that push to the last week's high if we do get that. Excuse me. All right, switching to the day. So let's clear things up a bit here. There we go. Switching to the day. There we go. If we do go 2 up on the day, that locks us in as a higher low on the day, which is a good thing for bulls, because we are coming from a lower high situation. So we got that higher low, we continue to push up, we get the higher high, now we get a trend started. Yeah, and we're pushing back towards the top of this range. Again, be cautious towards the top of the range. The edge of the range, you want to make sure that we're not going to get some type of look above and fail. We want to get that poke above and some type of higher low on an intraday time frame and push back towards those highs, right? Now, if we go to the downside, we're starting, I don't even want to say we're starting a downtrend, because we're coming from a higher low, but that higher low is after a lower high. So we've got consolidation. If we make the lower low, now we're, I guess, technically starting a downtrend, because we've got lower high, lower low. But don't go too far over your skis. You could just be coming to the bottom of the range here, give ourselves a little look below and fail and come back to the top. That's very possible. But just make sure that you're watching. If we do go below previous low a day, there's not a lot of magnitude on this 2 up, 2 down move. But just look for the movement more towards the bottom of the range. All right. Let's take a look at the week real quick. We did look at the week earlier, but just to make sure. Oops, that's not what we wanted. All right, there we go. So again, want to push up. 2-1 2 up, it would be the objective. Not only to reach the strat, but to make that higher high and lock in that higher low. So that's what we've got on the table there. Watch out, if we do go to the downside, it does lock in that lower high, but again, we're coming from a 1, so we could get a situation where we get a 1 2 down and then next week get a 2 up. All right, let's go ahead and look at the notes here. That way we've got some hard numbers to look at. We've been looking at the charts quite a bit, right? So for Monday, February 23rd, there will be 217 trading days left in 2026, and the close price on Friday, February 20th, was 67.11. We don't know what the week flip number will be yet, because it's not week hasn't opened yet, but we know the month flips red at 59.51. The quarter and the year flip red at 45.13. So a good distance off, and right now full time frame continuity to the upside. The week, month, quarter, and year. I'm sorry, not the week. The month, quarter, and year are all green. We talked about earlier the week's expected move by the market makers is $9.08, giving us an expected range of 76.19 to 58.03. And there are no gaps above right now, but we are aware of where our gaps are below. Right. We talked about from a scalping perspective, we want to look for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. Calls, of course, we're shooting for overnight high and previous high a day as the targets, and puts, you're looking for overnight low and previous low a day as the targets. From a 4-hour time frame, we talked about if we go to the downside, we get a 2-1-2 down, triggering at 65.54 with the magnitude of 63.58. And if we do reach that level, that does kick off a 1-2 up combo 2 down with an ultimate magnitude of 61.43. To the upside, if we get movement to the upside, that gives us a 2-1-2 up continuation, triggering at 67.45. Not a lot of magnitude there, 68.22. So we've got our extended targets listed out here for you as well. On the day time frame, if we go to the downside, that gives us a 2 up, 2 down, triggering at 63.58, magnitude being 62.96. So not a whole lot of magnitude speaking from a day time frame perspective. So we do have the extended targets listed out here for you as well. On the upside, if we go 2 down, combo 2 up, that triggers at 68.22, magnitude of 68.44. So not a lot of magnitude there, but we do have the extended targets out here for you, including the 71.98 that would give us the higher high on the week time frame. Speaking of the week, if we go to the downside, there's the 2-1-2 down that triggers at 59.56, magnitude of 59.29, which then triggers a larger 2 up, 2 down, 3 combo 2 up, combo 2 down, right? And that magnitude is all the way down there at 42.01. So we've got some targets on the way down, not necessarily because we're in uptrend, but because we are more in consolidation. So these are definitely bounce points, major points of inflection, especially getting that 49.33 level. But if we do get below that, there is kind of a lookout below domino effect that can take place, especially with the month triggering at 45. But if we do continue to the upside, if we get above that 68.22, then the market makers expected. No, I don't know why that's on there. That should be magnitude. I don't know why. Magnitude of that move is 76.08. All right, there we go. So 68.22 is the trigger. Magnitude 70.86, but that does put us in a larger 2 down combo 2 up strat, and the magnitude of that is 71.98. Which again, if we get above that, gives us the higher high on the week time frame. If we do continue past that, 74.21 is the all-time high, but these are the points of inflection to the upside that we're looking at. Now on the month, like we were talking about, this 45.08 could trigger the 1-2 up, 2 down with the magnitude all the way down to 28.12. Again, don't know that that's going to happen. We're not close to it right now, so we're not going to talk too much about it, but just know that that is on the table. What we do want to look for is this continuation, the 2 up continuation at 71.98, which then puts us up into shooting again for that all-time high and then into blue sky territories, right? On the quarter, we talked about how we ran the 1 combo 2 down, combo 2 up, reached its magnitude, so not a lot left there to talk about on the quarter. And the same with the year, right? We went 2 down, 2 up. We reached magnitude. So you just want to continue to see that price movement going to the upside, reaching those all-time highs and getting into that blue sky territory. But that is it for today's show. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. Tried to jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed today's video. If you did enjoy the video and you've made it this far, go ahead and give it a thumbs up. You know, it's free, doesn't cost you anything, and we think it's a pretty good exchange for a free educational video, right? We don't charge anything, we don't have any membership plans or anything like that. We just like to put out as much free information as possible to try and help people get a little bit better with trading, right? Trading isn't necessarily going to be easy, but if you can make it easier, that is the goal, and that's what we're trying for here. So if you did enjoy today's video, go ahead and give it a thumbs up. If you think it'll help somebody else, give it a share as well. So we'll go ahead and end the video here like we normally do. If you're watching this Sunday during the day or Sunday night, we hope you get some good rest tonight and hope that you wake up refreshed on Monday, ready to trade. If you're watching this Monday morning or Monday during the day, we hope you got some good rest last night and woke up refreshed this morning, and we look forward to getting out there and trading with you.